So hello, Lorenzo and Krista. So Lorenzo, you're on my left of my screen. So would you mind introducing yourself first?
Sure. And unlike other callers, any strange noises from my end come from my dogs that are sitting on my lap. You can't see them, but they are very demanding of attention. Hi, everybody. Thank you for having me. My name is Lorenzo Thione. I've been an investor for most of my professional career. I started out as an entrepreneur, as a founder, sold my first business to Microsoft and started angel investing back in 2008. I have invested in more than 250 startups across the last 15, 16 years. I agree with much of everything that has been said already on investing, and I'm sure we'll talk about it in a second. I've dedicated most of my career to really looking at representation and visibility issues for minorities of all kinds in the business and in many other environments. In fact, I'm also a creator and producer on Broadway, and have continued to do that for the last few years. Interesting, different asset class that we can have a different call about some other time. But more recent time, after a few startups, I helped grow an angel syndicate that was born originally as an angel group, really morphed and grown into one of the largest, most active syndicates in the world, dedicated to supporting and increasing diversity in venture capital and visibility for all minorities within the ecosystem, within companies, within cap tables, and as capital allocators, called Gaingels. And that's really what I do all day long, most of the time. That's my full time.
What do you do with your free time, Lorenzo?
Right, yeah. I play my dogs.
Well, thank you. And by the way, for the audience, both Krista and Lorenzo are talking to us from the East Coast. So they stayed up late to help us out. Thank you. So Krista, would you mind introducing yourself?
Sure. I went after Lorenzo on our prep call too, and I regretted it then. I regret it now because my bio is not nearly as impressive. But so I'm Krista Morgan. I'm a general partner at Stage, we're an early stage private equity fund that does control buyouts, actually post-Series A companies. So kind of on the other side, the companies that take angel funding, take venture, but aren't meant to be on that path. We give them a different home. And then before that, I got into this business because I started out as a fintech entrepreneur. I built a lending platform. I did that for about 8 years. We put out about $1 billion in small business funding, and it all went well until it didn't, which does happen. So happy to talk about that experience. And then I also am an active angel investor. So I have a group of actually fellow tech CEOs that we do angel investing together.
Fantastic. And I want to mention to the audience, I specifically reached out to Krista and Lorenzo because they have such different sets of experience. And Krista, I don't think you mentioned, where are you based out of?
Oh, I'm usually based in Denver, but right now I'm in Montreal for the summer.
Oh, so nice. But yes, Denver, I think, is a nice, smaller fintech community. And maybe I'm wrong with that, but that's partially why I was reaching out to Denver. And I even visited a few years ago and was quite impressed. Whereas Lorenzo, New York is, of course, one of the world centers of financial work. But for any beginning fintech investor, you can choose one or both approaches. You can syndicate anywhere that you have some connections. And so I wanted to bring you on for your contrasting opinions and experiences. But I'd like to ask, and Krista, maybe I'll ask you, I know you do some fintech investing, but do you have any thoughts on what some of the trends are in fintech based on what you are seeing?
Oh, that's a good question. I mean, I think fintech's it's a fascinating sector because there's a lot of elements to it. You're running the gamut of everything from, call it banking infrastructure, software, you've got these lending platforms. There's a lot happening in real estate. There's a lot happening in, and then all the way into crypto and blockchain. So I think it is quite a complex space. I think there's a lot. I don't know if I could speak to trends. I think the trends are probably about to change given the current environment. But for me, I am a big proponent of having run a fintech company. The thing is, as we run startups, we get really excited about product. We get really excited about, our customers. We want to deliver this great experience, but things like compliance, things like really understanding the regulatory environment you're in, really making sure that you are ready to scale from a compliance standpoint is something that comes up in fintech that I think doesn't show up as much in other areas.
Oh boy, I think we just lost Krista.
Lost Krista? No, she's back.
Oh, sorry. Did you guys lose me?
We lost her for about 5 seconds.
Oh, sorry about that. Apparently my internet connection is unstable. I think it's the hockey game streaming upstairs by my husband. So sorry about that. I don't think you missed much, but it was 5 seconds, so we're fine.
That's okay, but it is wonderful listening to your passion. And I know you ran a startup for a while, and so thank you all for that. Lorenzo, with all that you do, what are some of your thoughts about some of the trends that you're seeing in fintech these days?
Yeah, and I'll preface it by kind of giving a little bit of context around what makes the Gaingels models a little different than others. We really are looking at companies at all stages of growth, not exclusively early on sort of angel stage, but rather at the entire life cycle of the company. We invest pre-seed to pre-IPO, and we only really invest alongside venture capital firms that are basically leading these rounds. So what we're effectively getting is the benefit, and sort of riffing on what was being said earlier by the rest of the panelists, we are benefiting from the work, the expertise, the experience, the diligence, and the by proxy sort of the track record of the firms that are choosing the deals that we are participating in. So in a sense, we're also seeing the trends that kind of are reflected by the taste and the decision and the selection of these firms. And these change periodically. There's, I don't specifically look at all of the fintech deal flow. There's other areas that I'm more passionate about and that I follow more closely, but we are all generalists and we all look at pretty much everything in terms of what comes our way. And I can tell you that it's significantly different, the amount of companies in the fintech space that were coming in last year. There was a ton of Web3, DeFi, decentralized finance, sort of crypto deals in the context of fintech. There was a lot of banking and banking products, sort of neobanks, challenger banks, financial literacy for sort of certain subsegments of the population, helping people pay off debts and save for certain financial goals and so on. And almost all of that right now is, well, I wouldn't say is completely dried out, but there's a lot less. And what I'm seeing quite significantly more is more sort of transaction-based business models around payments. So lots of payment platforms and payment plays, and more of an enterprise infrastructure, finance infrastructure sort of set of companies. So I would say just broadly, what I'm seeing a lot more right now is fintech infrastructure and payments with business that are much more transaction-based, business models that are much more transaction-based. and less of the sort of direct consumer SaaS-based model around sort of saving or the neobank sort of model. Again, a lot of those really proliferated in the, oh, we're going to be the neobank for this segment of the population or that segment of the population. It's not so strange to recognize that in a moment when it's risk on and it's hyper growth, then every market, no matter small, looks like it's gigantic. And so everybody was, sort of carving out these small spheres of influence and building what they, assumed or sold as really big scalable businesses in sort of somewhat small segments of the market. And now that is significantly different. We'll probably see some, many of those companies will, of course, not make it, and others will be sort of rolled up, and we will see kind of more of an aggregation of those different consumer plays in the fintech market.
All right. Fantastic, insightful. Thank you very much. And it's a lot to ask for you to like explain all the fintech trends in like 5 minutes. So thank you, not bad. Krista, you were speaking a little bit about some of why you're interested in fintech. And would you mind talking a little bit about some of the unique opportunities with fintech or some of the things that you are very excited about with it? Or what drew it to you at the beginning?
Sure. Yeah. So funny enough, I started a peer-to-peer lending company, and I started it because I had moved to the UK and I was sitting at my kitchen table going, why are interest rates so low? And yet I can't, like interest rates are low and yet what I'm being charged for a loan is really high. And I was like, people should lend to people. And this was in like 2010. And turned out there were these companies starting to do it. So that was how I discovered it, really from a personal issue that I thought was interesting. And then as I got into it, I find that, and one of the big VCs in this space wrote this great article about how like finance is everything, and in the end, every company is theoretically a fintech company because it's so pervasive in our lives. Sorry, am I still going? Yeah.
Oh, you are just fine.
All right, I'm fine. And so like, sorry, I lost my train of thought. So, so I think with finance, finance is everywhere. There is so much opportunity. There's just, like we haven't even started. Like when you go in, we were trying to sell our software to banks when I was running my company, and you would get into these banks and it was unbelievable how much opportunity for innovation there was. But then that was when I discovered that innovation is only one part of it. Actually, it's so hard to innovate because of the compliance and regulatory frameworks that exist. So I think the people that can figure it out, those are the ones that actually can sell. They're the ones that are able to sell their product. And I think that's really what you have to look for. It's what I look for when I'm considering fintechs to invest in.
And I promise we'll hear a little bit from a future panelist about compliance later on in this session, as Tara's smiling up there on my screen. But thank you for that. I think I like hearing stories about what brought founders to certain, what drew them into a certain industry. And I think for fintech investors, it might, as you look at some, if I were an investor, one question I might want to ask is what brings a certain startup person to an industry to solve a problem. So that's neat. I would agree with you that there are challenges out there, and the person that can figure it out with the regulatory framework can win. But I do think that fintech is, now from my frame of mind, a lot more doable than, say, pharmaceuticals. That's the kind of thing that would scare me. But let me not comment so much. This is not my panel. This is yours. So thank you. Lorenzo, do you have some thoughts on some of the unique opportunities out there for you? I mean, just your opinion.
Can you rephrase that? not sure I understand the question.
Oh, yeah. So you were talking about some of the trends out
Right.
there. So with those trends that are out there, are there some good opportunities now for angels, at least maybe approachable for new angels? And
Yeah. I mean, there has been and will be great companies founded in all moments of time, including and especially moments of sort of economic compression. You're just going to see a lot more discipline, both on the capital allocation side and on the sort of startup side, on the founder side, with really understanding the fundamental of what makes a business a good business, how big the market needs to be, what a scalable business model can and should be, and especially true in fintech. And so, we're going to see fewer companies receiving capital, and certainly at more reasonable valuations. But there's no question there's going to be great opportunities for angels of new companies being founded now. I just saw, this is not for everybody, but we just invested in a fintech play that I think is absolutely brilliant, absolutely fantastic, and a lot of VCs actually decided they would stay away from, which I think is a bug in the system, not a feature, because this is a smart two-people team that was building a modern payment processor. And when I say modern, I mean with all of the features that you would expect from a Stripe or a similar kind of payment processor company, but that would work with businesses that had been classified as at risk or risky business, which fundamentally we're talking about porn processors, OnlyFans, or adult content gambling, which in reality have been only defined as high-risk transaction categories to avail or to satisfy old vice clauses that were in the LP agreements of most VCs. And when you actually go and look at the rate of returns and the rate of chargebacks of these businesses, not only they're not any higher, but they're often lower because they know that that's a risk on their side, and they do everything they can to actually lower that. It's a fantastic business. And so this company called Edge that is building this processor for the greater risk category of businesses that need a modern processor, and that right now are stuck effectively with using three monopolistic businesses that have been doing this for 30 years and that charge enormous rates at a completely disadvantage from a feature and functionality product. So just an example of companies that we're seeing all the time. And there will be great opportunities in fintech as well.
And I do love that example, because it is something that apparently had been overlooked for a while for some reason, but it's, in this case, it's the definition of risk. It has to do more with vice clauses than actual financial risk.
Correct. Like they were trying to disguise the idea that, oh, we're not banking you and we're not providing you these financial services because you're a high risk category. But in reality, it was just a way to disguise the fact that they all had vice clauses in their LPAs and that they didn't want to deal with brand reputation or whatever perceived sort of issue they had. And that leaves a perfectly viable, good business that could have otherwise been funded by VCs not getting funding.
Not bad. And as me, just as a spectator to all these fintech things, opportunities out there, I get excited when I hear about some sort of hidden market, or I shouldn't say hidden, but overlooked for whatever reason. And I also think it's nice because there are some opportunities that are overlooked often that can be potentially interesting to certain types of people, whether it's that or something in certain societies. And I am excited about some fintech groups out there that serve certain members of segments of society. I work with banks, so I always think about the underbanked or the unbanked, or certain groups out there. And I love hearing these stories. And it also shows that there there are opportunities out there other than what you read about in the papers, and that gets the spotlight.
Absolutely. We are just looking at an opportunity. It's a later stage. So like I was saying, we don't do just early stage, but through our syndicate, individuals can invest angel style money into opportunities that are even later stages. And the underserved market thesis is always a good one to go after, because there are always some reasons why it's underserved, and understanding those reasons often kind of leads you to the insight about how to improve that. And we're just about to invest in a company called North One, which is actually, I'll eat my words a little bit from what I was saying before. This is it's not a new company, so still okay, but it's a neobank, challenger bank, but actually serving not a niche at all, serving probably the broadest, largest constituency in the US market, which is the really the small and medium business. When you look at all of the sort of individual stores and shops and family owned businesses and operations with a really modern and much more cost-effective product that can deliver not just banking, but also effectively support what other companies would see as their finance department. The product actually allows a certain amount of that finance department support to go, say, to the barber shop, and provide even sort of a connection from the informal economy, cash-based economy into the digital one. Really exciting business as well.
Not bad. Wow, you should have your own TV show. The way you talk about some of these things. But thank you so much. And I hope that gives an idea to the audience, just the wide range that are out there. Of course, Lorenzo, you get exposed to so much more than many of us, but it is nice, a nice little illustration. So do either of you have any concluding statements to any angels who are thinking about investing in fintech or trying that out?
Krista?
I think the only thing I would say is, so we got a lot of angel money in Denver to get started, and a lot of angels, we're doing like small business invoice financing, and there are a lot of people that didn't really didn't understand the nuances of credit and all the lending pieces. But what we found was having a large group really helped, because there were a couple of angels that knew the space well. They led the diligence, they got everyone else comfortable. And I would go and have lunch with a lot of people that were like, we don't really know what you do, but we think it's great, and we're glad we did this diligence. We're glad we're in the deal. So I think all the points about finding other people to invest with, finding someone who's an expert, especially in fintech, having someone on the investment group that I think really gets the space helps a lot.
And it does. I'm really glad you said that, Krista, because that's actually one of the reasons why I'm trying to start a community here, is to get other as a startup, you have so many issues you have to deal with at once, and having a few angels in a particular area, even if it's in another city, helping out angels here can help a lot for something that actually is perfectly viable, but they just understand the space and some of the dynamics, which aren't obvious to others. Do you agree with that? Yeah. Thank you so very much, Krista. And Lorenzo, do you have any concluding statements?
I think a lot of what has been said is great. Get out of your comfort zone is actually a good thing as well, because there's lots of really interesting opportunities, and what you might know from your professional career may really not be necessarily what is about to explode as an incredible new category. So really being open to looking at new businesses and new business models is always helpful. Join groups, angel groups at the earliest stages, syndicates. One of the advantages there, like I said, is that the leading charge and the diligence really comes from professional investors that are actually not only paid to do, but have the resources to do kind of large analysis on the business models, on the market comps. So, whatever ways gets you comfortable to to invest, that's great. And then the other seems like an obvious a recommendation to everybody, but it's not about making one investment, right? It's about making many different investments and diversify your portfolio, just like you would do in the public market. And even looking at diversifying by stage is helpful, right? So the understanding the differences between risk and reward profile and time to exit for a seed stage investment versus a Series A or Series B investment can be helpful in creating a portfolio of investments that have sort of a more diversified risk profile.
Very nice.